Okay, thank you everyone. All right, so we'll get started. So first of all, my name's Paul Cooper. Along with Marianne Graham and Clancy Patterson from our Wagga offices, we'll be taking you through the first of four webinars Rural Co-Water will be hosting over the coming weeks, focusing on the major growing areas. Today's the Murrumbidgee's turn, and over the next couple of weeks, we'll talk about above and below choke areas as well as the Goulburn. So what are we going to be covering today? Well, we're going to divide it into three main segments. First of all, not to be too accused of being supercilious, we'll talk about some insights that we've seen from this season as a bit of a recap. We'll talk about the basin plan updates, and of course, because sometimes we need to know where you're going, you need to know where you've come from. We'll talk about where the season is headed into next year, about how the outlooks look. There'll be the opportunity to ask questions during a Q&A session at the end, but if there's any questions that pop up during the webinar, during the presentation, you're welcome to put things into the chat box as we go along. So some of these insights will be familiar, but we're hoping that they will guide some thinking and some decision making as we conclude the season. So first things first, we'll hand over to Marianne Graham, who will talk us through the insights from the current season so far.
Hi, everybody. So the first thing I'm going to talk about is what's in the storages. It's always an important aspect to know where we are currently and what the water availability and price trends has been. We're going to sort of look at where we are now versus coming into 1920, which is a sort of an analogue year that we're using because the storages are similar. And then Clancy will talk about the basin plan. So Paul, next slide, please. So this is the total Southern Murray-Darling Basin active storage charts. It goes back to 2001. You can see there the total storage is currently 43%. Compared to, I think this time last year was 52%, so we are a little bit down. That's across all of the, including Goulburn, Murray and Bidgee. What we've circled here is some other years where it's been low, and you can see where we currently are in that line. We're slightly above where we were at about this time 1920. And we're above where we were at 2021. I guess 1920s are an important year because obviously that was the third year of the drought. And we're in a kind of a similar 2021, it started raining. We hope that might happen again, but at the moment it is looking like a dry outlook from what the BOM and various sources are saying. So we're tracking in that sort of 1920 kind of year. Okay, Paul. So this is a closer look at the Murrumbidgee. We pulled out 19, 20 and 25, obviously the last year, 25, 26. A couple of things to note. Going into 1920, which is, if you see there, the April, May, June is obviously the end of 18, 19. The carryover into 1920 Murrumbidgee was 8%, and they also got a 0% start at the start of the year. I think they went up to 3%. I think the maximum went to a 7. So at the end of 25, 26, we do have a higher currently carryover amount, which I'll talk about at the moment, but they are forecasting a 0%. You can see there also, so I guess that's what we're saying. It's heading into a similar to 1920. The other thing I'd note in 25, 26 was you can see that drawdown where it's sort of the storages were higher in September, October. I guess to my mind, what happened is back in August, September, there was talk of a La Nina spring and it was going to be wet. So a lot of people in Murrumbidgee went ahead and put in cotton and rice with the optimistic hope that there was a wet spring. Didn't really happen. And then obviously the prices went up and people had, once they had committed, they had to keep growing the cotton. And we saw this sort of strong drawdown and jump in prices at the end of December and January. And they've sort of stayed there because we haven't yet had the dams filling up that much. Okay, thanks, Paul. So these charts, this is again looking at the past forward allocation markets on the left-hand side, and on the right-hand side is last year's carryover market. So I'll talk about the forward allocation market first. We've split that as the blue line is the average prices, and the green bars are the types of entities that were purchasing or what they were growing. So you can see the large amount of, these trades would have been done in 24, 25 for the 25, 26 year. You can see there was a large amount of almonds, but there's also a large amount of cotton. This you can see there the prices were back in 24, 25, for 25 were kind of 200, so they were in that accessible range for cotton and probably other annual crops. And yeah, they were just a lot lower. Well, they're a lot lower, and they've been going up obviously as the temp price has gone up. And they're currently around 490, I think, for going forward. On the right-hand side, we just point out the carryover. The carryover last year, at the start of when it was started having a fair bit of trade in March 25, it was quite high. We had some at a sort of $90, $100. That was when the prices were low. So as a lot of people probably already understand, if the temp price is low, there's usually a lot of water around, so less space, and the carryover price is higher versus as the temp price increases, the carryover space becomes, so as the price increases, people, aren't willing to pay for carryover temp price, and there's usually much more space, so then it drops down. That's what we saw in June 25. It went down to 40, but you can see there was a lot of volume that traded there because it was starting to turn a bit dry, and people wanted to lock in forwards for their cotton or their annual crops. Okay, I think you're doing this one, Paul.
Yep, absolutely. So now that we've had a bit of a look at the availability as to what happened this year, and particularly with water coming in from forwards and carryover last year, what did that actually mean? Well, we saw an influx of trade activity in the almost the expected times in the lead up to the spring and summer watering peaks. So August, September, October. November dropped down a bit, and then into December and starts to tail off into January. You can see by that chart there where the pricing movements really occurred. Things started to move up on the back of that spring demand, and has peaked as the summer conditions kicked in. So not a lot of that should be much of a surprise to people as the price moves up as the weather increases. IVT openings had a bit of an effect where the start of the year trade was open in both directions, and is now closed off to out trade to the Murray, which leaves a bit of a confined audience for Murrumbidgee temp buyers, as they can only buy from the Murrumbidgee at this stage. The increases to the general security allocations are interesting as well, where it certainly increased up to 32% in October, and then pretty much has stayed where it is as conditions have dried out there. Looking at the high security or the permanent markets in general, permanent high security has remained pretty much stable pricing wise, as that chart tends to show, and the majority of buyers have either been corporate or private investors as we've gone along there. We do see the high security, both Murray and Murrumbidgee, as one of the entitlements that has that capital growth potential. And a lot of that is coming down to two main reasons. One is government buybacks, quite literally shrinking the pool of availability. The other one is the high allocation yield, the strong allocation yields, particularly in dry conditions, which becomes a more of attractive proposition to people who are looking for that allocation security. Across the board, there's been probably increased buyer activity over the last few months, which is primarily because of the dry conditions and, of course, the forecast that we have at the moment. And, of course, the buybacks through EOI RFT2 are likely to have an effect there as well. Into general security, well, it's a tale of two cities. We tend to find during dry times, general security often does have a softening effect on pricing. There has been counteracting that some reduced availability due to Commonwealth purchases for general security. Low allocations, of course, though, mean that it is one of those entitlements that seems less attractive in dry times, and we often find a bit of an increase in seller activity, particularly over the last few months, as we tend to find some vendors might look to rebalance their portfolios to free up some capital for to deploy in other areas there. It is, of course, one of those entitlements that does perform better in wetter years, and I'm sure we will see that rebound when conditions do turn on the wetter side again. What does this mean to other markets? Well, if we look at the permanent entitlement leases, and we'll focus on high security primarily, but a bit of data there about general security, that typically does tell a lot of the story. We tend to see a lot more volume of leases traded during wet seasons. However, the price is inversely proportional, where the price does drop in parallel with the temporary market dropping there, even though lease pricing is more often tied to percentage of entitlement valuations, more so than anything else. So you see during the 1920 season, bit of an uptick in activity there, and the price spiked up accordingly. As people went to lock in long-term security, whilst pricing was lower, you saw the volume traded or contracted higher, where the price drops down there. And as we look into this season, we're starting to see that volume increase again. However, that is primarily due to people's concern about security, and that's having an effect on the price there as well, as it joins in with the temporary market there. On the general security side, you do tend to see that more volume is traded during those wet seasons, and the price does fluctuate accordingly. However, whilst there is some being offered around, there's probably not a lot of interest for general security leases at the moment. And although you would imagine that would the complexion of that would change during the next wet season. So now that we've talked about what's been happening so far, we're going to look at the Commonwealth buybacks before we head on to the outlook and summary for next season. So now I'll hand over to Clancy to talk through the government buybacks and where they're up to. Over to you, Clancy.
Thanks, Paul. Yeah, so I'm just going to take you through the basin plan and give a bit of an update on where things are currently at. So I'll be going over the Restoring Our Rivers framework and the progress towards the 450 gigalitre target, the purchasing programs that are operating within the Southern Basin, the Aboriginal Water Entitlements Program, or AWEP, and then some of the implications of ongoing water purchasing from the Commonwealth. So the 450 gigalitre target represents the volume of the additional environmental water that the Commonwealth has committed to over and above the Bridging the Gap target. And it's something I think that's worth noting here is that the Bridging the Gap target has largely been met. However, there has been some complications made following the long-term diversion limit equivalent, or LTDLE factors, which were published in October last year. So the LTDLA factors are a conversion rate that the Commonwealth uses to calculate how much water recovery credit an entitlement actually delivers to the Bridging the Gap target. It works in a similar way to an exchange rate, so not all water entitlements are worth the same amount in the context of the recovery target. So when these factors were updated, it showed that certain entitlements in the Murrumbidgee were actually delivering less environmental benefit than expected. And this has resulted in a gap that has reopened in the Bidgee because the water that had been counted was no longer meeting the obligations. This means that the Commonwealth will need to purchase additional water in the Murrumbidgee to close the gap. There's also been some changes to the legislation that I think are important to consider, particularly given they could have an impact on the Murrumbidgee market. So the changes extended the deadline to recover the 450 gigs from mid-2024 to the end of next year. It also extended the deadline for SIDLAM projects to the end of this year. And just for reference as well, SIDLAM is the arrangement that allows the government to recover less water through buybacks, as long as each state delivers an equivalent environmental benefit through projects instead. And the legislation also changed, removed the old 1,500 gig cap on Commonwealth water purchases. So there's now no ceiling on how much they can buy. In practice, purchasing has been the far dominant program for the Commonwealth to meet these targets, but there are some efficiency projects progressing. There's a project underway in MI that will return just over 2 gigs per year to the Commonwealth Environmental Holdings. And as at March this year, there's been approximately 221 gigs agreed for purchase toward the 450 gig target. And DQ has also advised that they are planning to recover 400 gigs by the end of this year, which is a full year ahead of the December 2027 deadline. Next slide, please, Paul. So there are 3 core purchasing streams under the framework that are relevant to the Murrumbidgee. The first was the selected catchments open tender, which was for up to 70 gigs in the Southern Connected Basin. That tender is now closed, and it closed in August last year, and there was just over 51 gigs per year agreed for purchase. So like I said, it's now closed and there are no further offers being accepted. The second is EOI1, which opened in September 2024, and it was designed for individual entitlement holders rather than the larger corporate portfolios. Before the Commonwealth can formally or could formally commence purchasing any of this water, they were required to assess the socio-economic impacts of the program. And we've seen that this assessment has created a lag between the EOI closing and the actual commencement of purchasing the water. The assessment is now complete, and as of Feb this year, there's been 8 gigs per year of water rights agreed to purchase via EOI1. And the third program is EOI2, which was targeted towards those with more than 20 gigs in their portfolio. The program was approved to purchase up to 100 gigs, but it's been expanded by a further 130 gigs in November last year. And as of Feb this year, there's been about 130 gigs per year of water rights agreed to purchase via EOI2. And I also just wanted to make a quick note on the SIDLAM here as well. It's worth keeping an eye on the reconciliation, which will be due at the end of this year. An independent assessment did estimate that there will likely be a shortfall of between 190 to 315 gigs against the original 605 gig commitment. And this gap's going to have to be met somehow, and it's likely that the Commonwealth will need to purchase additional entitlements to meet this gap. Next slide, please, Paul. So just for reference, AWEP is a $100 million federal program to acquire water entitlements for the benefit of First Nations people in the Murray-Darling Basin. And the main difference here is that between AWEP and the Commonwealth purchasing frameworks is that water purchased under AWEP remains within the consumptive pool. So it's held in a trust for the First Nations communities, and it can be traded. And the idea is that the economic returns are directed back to the First Nations communities. The government has actually developed a temp water trading strategy for this. So the entitlements will soon be active in the allocation markets. As of March this year, the program has purchased approximately 16.6 gigs of entitlement across multiple basins at approximately $60.4 million worth of value. But in the Murrumbidgee specifically, there's been about 5.2 gigs purchased at a value of $17.8 million. The AWEP program is still open for submissions until the end of the year, so it's likely there will be further acquisitions between now and then. Next slide, please, Paul. So I just wanted to go over some of the possible implications within the Murrumbidgee from ongoing water acquisitions from the Commonwealth. In terms of water availability, one of the core issues will be that the baseline is constantly shifting. So with every entitlement that the Commonwealth acquires, it reduces the volume of the consumptive pool. This means that the allocation outcome required to meet productive demand will become more difficult to reach, and the carryover buffer may become slightly thinner. So in an average year, we might see some pressure start to show. If there are modest allocations and reduced carryover, this could very well create some tension on prices and availability. And in a dry year, it's likely that this pressure will only worsen and creating a water deficit risk within the valley. And it's important to consider the impact on annual cropping programs as a consequence of the tightening water supply and availability. As we saw in some of the previous slides, rice and cotton account for a significant share of water demand in the Murrumbidgee. And given these crops are water intensive and highly sensitive to the allocations and water prices, we may start to see a reduction in the number of annual cropping programs within the Murrumbidgee. I'll now hand back over to Marianne for the next section of the presentation.
Hey, thanks. So now we've looked at where things have been in 25-26 and the basin. We're going to try to make some insights for you into 26-27, which is always difficult because obviously things can change, but we're basing our outlook and insights on where we are at the moment, what the sort of BOM and various weather sources are saying, and just to give an upgrade. But yeah, a disclaimer, obviously, if it starts pouring down rain, everything can change quickly. So this first slide is basically our assessment of the dam levels in the southern Murray-Darling Basin. And you can see that the storage is up there in the right-hand corner. This year are 43%. Last year were 52%. I sort of dug a little bit closer into the Bidgee and Murray just to compare. So Bidgee last year was 38.5 and it's down 29.5. So it's down about 9%. Where the Murray isn't actually down as much. It was 44.3 down to 41.3, so it's only down 3%. So relative to Murray, Bidgee is faring a bit lower in sort of terms of storages. So that's just one thing to note. So secondly, now we look at the rest of the square boxes show our estimate for July 26th. Of where we think the allocations will start. Now, just take note that this is July, so obviously things will hopefully increase, but this was our first estimate. So SA announced over there on the left there, 62% initially. The asterisks mean these are estimates that we've made based off the information we have. So SA came out with that, so they've estimated 62%. The Vic Murray and Vic Goulburn, we've used the below average scenario. So the Northern Victorian Resource Manager has a below average dry, very dry, and we've used the below average. So Vic Murray, the opening would be about 30% and Goulburn 5%. In the Murray and Bidgee, they've all stated that there'll be 0% allocation in the general security in the opening. The Murray, they have stated they will have the 97% for high security. The Murrumbidgee, in the last statement, they stated it generally opens at 95%, but they've actually stated that that they're assessing that. So we take that to read that they haven't quite got it in the box yet, the 95%, but hopefully they will have. As I said, there's no openings for general security. Supplementary will get their full allocation as normal, and you will have full access to your carryover. They've already stated that. So as far as what will be carryover, in the statement, it states about 19% in Murrumbidgee, but that does include the environment. So from an estimate, we've taken a look at it. The current consumptive allocation on the general security licenses in Murrumbidgee are about 198 gigs. Based on that, I would estimate a 13 to 14% carryover on consumptive. So that's not New South Wales Enviro percentage coming in. The other thing I'll just note is with the Vic Murray, the scenario for below average, which is the one we've used, does still estimate 100% by December. And I think in December it estimates Goulburn to be 84%. So that's just a couple of other things to notice. I think that's all for that one. Thanks, Paul. So this is we've also gone and looked at an initial estimate of supply demand. Now, because of where the prices are above $400, we've made an assumption at this point that there'll be minimal cotton and rice planted. Now, obviously there will be some, but for the purposes of this calculation, and obviously it can be highly variable depending on the price. So at this stage, we're just looking at more the permanent plantings, use orchards, grapes, olives and walnuts. So you can see there the table. We've estimated the hectares. Now these are estimates from our Nutrient Ag Solutions agronomist area. So that's where that data's come from if people are wondering. And also a megalitre per hectare that we've estimated there from those also. So you can see that where the citrus and grapes circum, but the significant one also is the 165,000 megalitres of almond use. So that would put the demand for Bidgee for next year at about 350 gigs. Now, again, I note this does not include winter cropping. It doesn't include any annual crops in there at all. The current, so that's the demand. So that's our sort of feeling of demand. As I said, current consumptive availability is 198. Now that will probably go down a little bit because we go into May and June and there'll be some usage. High security, I've just used a sort of 80 to 95%. So I'm going to sort of assume we probably will get the 95%. So that those two things would lead our availability to be between, we've got there 519 to 569 to start with. And that's again assuming a 0% general security allocation. So that's not huge, and you can see that this also doesn't include the balance of the IVT, which I'll talk to in a little while. So that can move 100 gigs. It could move 100 gigs back the other way, which would from Murray, which would bring extra supply in, but we haven't included that. So it's about, there's probably an extra sort of that 180 to 200 gigs of supply, but that's not a huge amount. So this is going to lead me to talk to the next slide, which is about the IVT. So the IVT, most people will know this, but I'll just go over it. It's the intervalley trade between Murrumbidgee and Murray. It's 100 gigs sliding scale. So if it's 95 one way, it's 5 gigs the other way. If it's 50 gigs one way, it's 50 gigs the other way between the Bidgee and New South Wales Murray. It's currently 5.9 gigs, which is the capacity for Murray to Murrumbidgee, and that means it's shut. It will open. The only way it would open between now and end of June is if some flow of trade started coming from the Murrumbidgee to Murray, and that 94.1 gig moved to 85. Then it would open both ways. Currently, the Murrumbidgee price is above the New South Wales Murray price. So in my thoughts, that's unlikely to move that much. The other thing is, in the statement, they've actually announced that the IVT will close at the 30th of April. They've just stuck that wording in there, which I believe, and I am confirming this, means that Murrumbidgee to Murray trade will shut at the 30th of April, but we are trying to get that confirmed with Water New South Wales. The other thing to know about the IVT is it does roll over from the end of June, and some of the Barmer Choke and some of the others restart at zero, but the Bidgee doesn't. So if it stays around like it is, on 1 July, it will open at these levels as well. So I guess so that's where we are at the moment. And the next slide you can move to, Paul. I'm just going to talk about, sorry. Oh, do we miss one?
No, that's okay.
Okay, sorry, just go back to that one. Sorry, go back to the IVT. Sorry, I finished. So I guess my other part I wanted to talk about was where we think the Bidgee, the IVT may open. So given that excess supply in Murrumbidgee isn't that high, Normally in the past years, we'd see a very quick flow to the Murray. I think in 1920 that happened because of the almonds down there. In years where the price is around 200 and everyone decides to put in cotton, it flowed to the Bidgie. This year is different. We probably won't have people demanding for cotton, but by the same token, we don't have a huge excess of supply in the Murrumbidgee. By the same token, we also will have some Murray, a high Murray demand, but that may not happen until spring. So my sort of feel is it actually could remain around where it is, or even end up opening both ways for a while until we kind of get to that spring level where we see where the supply is going to be pulled, whether it's going to be pulled from the Bidgie to the Murray or vice versa. So that's our sort of estimate at the moment. Yeah, that's about it for that one. Thanks, Paul.
Okay, thanks, Ryan. Okay, so if we're going to wrap up all of what we've talked about there, with the dry conditions on the horizon and continued government buybacks, what does that mean? Well, lower supply and higher prices across most markets are one of the more likely outcomes. And that comes with increased seasonal volatility along with low allocations. IVT encumbrances will have an effect there as well as we said, the buybacks there. So I guess everyone is different and everyone's circumstances are different there. So the key things are what are the requirements and your entitlement coverage. And within that entitlement name would talk about owned as well as leased. And how could further water recovery initiatives impact your water requirements there? And that's a question that applies to both next season and beyond as well. So as always, we'd say if there's any options or situations that you want to talk through with your local rural code broker, please feel free to reach out, and we'd like to, I guess, provide as much information and options as possible as we head into what could be quite challenging times. Now, that concludes the slides themselves. We'll go into a few questions, a mix of anything that's come through live, but also some ones that we've had asked online prior to the webinar. Before we get to any live ones, a couple of the ones that have been put online, because we've touched on a few of those as we've gone along. Marianne, I'll ask you this one. Where do we expect most of the allocation demand to come from? Is it going to be Murrumbidgee or Murray? And I think that leads into your couple of the comments you made about the IVT directions.
In a lot of other years, I would have said Murray because it's in a dry year when there's not a lot of annual crops. But I'm not so sure about that because this year, as I pointed out, the relative supply of Murrumbidgee to Murray is lower. The dams are relatively lower. And also we've got more almonds and more permanent plantings. One thing I think to note is to not discount the behavioural dynamics in terms of if there's temp trade that's not contracted via a lease or via a forward, then we can see people who have the allocation might decide to hold it, sort of thing, which can pull the temp price up. But I think it'll come from both, to be honest. I don't have a strong view either way at the moment. Yeah.
Okay, nice. Thanks, Rand. Next question will go to Clancy. Did we notice much of an uptick in groundwater use this year, which is historically quite possible given dry conditions?
Thanks, Paul. Personally, I hadn't seen a huge uptick in groundwater as much as I would have expected given the dry conditions. And I think there's been less interest into next season's groundwater usage as well than I would have expected given the allocation outlook and the weather outlook. But to some of Marianne's points, that could also be coinciding with less annual cropping, or the likelihood of less annual cropping being planted within the Murrumbidgee. So personally, not as much as I would have expected for both this season and interest into next season as well.
Excellent. Thanks, Clancy. Suspect the cost of other inputs, diesel, for example, may affect a bit of groundwater use as well, I would quite possibly think. Marion, we might need to take this on notice, but another question's come through. When was the last time Murrumbidgee High didn't open with 95%?
So the last time it didn't open at 95% was 2000 to 2011. It was 20%. It opened, and 08, 09. So this was sort of the millennial drought. It opened at 30%, and then there were 2 years where it was suspended. I think almost every year though it ends up getting to 95%. It just hasn't opened. Also know, talking to some of the guys at DQ, that they have better ways to operate things. So hopefully we might get the 95% at the start, or close to, anyway.
Okay. Thanks, Fran. We'll turn over now to any live questions that have come through. Wendy, have you been keeping an eye on the chat box there?
Yeah, there's nothing through yet, Paul.
Nothing through? That's okay. Because then I'll leave the final question then that's been submitted online, and this is the eternal question. I'll actually open up to both you, Marianne and Clancy. I'd love to hear both of your thoughts. What's going to be the opening price at 10th? It's like asking you what your favourite colour is, really. But anyway.
This is a complete kind of gut feel, but I'm going to say 520, 530, based on, where things are at the moment and the demand, and, just a little bit of an uptick once we get from 30th June into 1 July. That's my thoughts.
Excellent. Clancy, anything you'd like to add there?
No, I'd probably say around the same. I might have said slightly lower, but I'm happy to run with Marianne's answer there.
Might be a wise choice. It's good. Okay. If there's no further questions, that pretty much, I think, concludes where we're up to for today. So thank you for everyone who joined us today. If for anybody who's not receiving our regular market updates, we've got the QR code on the screen there for anybody who'd like to register. Thank you to Gokul and Wendy for providing us the slides and working through us to get everything up to date. And we'll look forward to joining you for next week for the Below Choke webinar, I believe it is. And if there's any other questions that you think about afterwards, please reach out to your local broker. Thanks for joining us, and we'll catch you next time.
Thank you.
Thanks.
Bye, everyone.